Hello everyone and welcome back to the Mortgage Administrator online event. Hope you had a good break and are raring to go for our next session. My name is Anna Sagar. I'm Deputy Editor for Mortgage Solutions and Editor of Specialist Lending Solutions. And we will be talking about the changing landscape of the mortgage industry, looking at changing customer demand, new market trends and shifts in distribution channels in this panel session. I'm delighted to be joined by Leeds Building Society's Corporate Account Manager, James Chutter, UTB Sales and Marketing Director, Caroline Mirakian, Amy's Chief Executive, Robert Sinclair, and Connect for Intermediaries CEO, Liz Syms. Welcome, everyone.
Well, hello.
Morning.
There will be time for questions at the end of this session, so please do submit any that you have, and I'll do my best to put them to our lovely panelists. So to kick off, I think we'll start talking about customer changes. So I'll go to James and Caroline first to get the lender perspective. So kind of what are you guys seeing on the ground in terms of changing customer behaviour? I'll go to James first, or Caroline, whoever wants to take it.
Oh. No, whichever, it's up to you. Okay, well, I'll just say, well, obviously, recent years have certainly witnessed significant transformations in buyer and renter behaviours, obviously driven by various challenges. If we start, obviously, with the aftermath of the pandemic, which was brought about an inflation and cost of living crisis, which has naturally impacted consumer spending power. So I think one of the most poignant shifts for me concerns our first-time buyers. And they, for me, have three key barriers which pose significant hurdles for them to purchase. So number one being deposits. So the ability to save enough, because what you normally find is they're renting as well. And with that makes it incredibly difficult. Plus all the also other cost pressures. There's certainly been a accumulation, should I say, in savings. Credit worthiness as well. The potential thin credit file history that younger applicants may hold, but also fundamentally the affordability hurdle that we keep talking about. So the ability to afford the monthly repayments. And now what we're seeing is, particularly on our side, the borrowers have been increasing terms to overcome affordability, rising to over 30 years in most cases. And despite this still, the first-time buyer average monthly payment is like £400 a month more now compared to than 2 years ago, which obviously is a significant one. Plus, also, we're finding that a greater proportion of those first-time buyer mortgages have maybe 3 or more named applicants on the mortgage, which is suggesting that first-time buyers are having to look to friends or family to get them onto the housing ladder. So I think these trends are something that needs to be looked at. We'll pass on to James in a minute because he's probably have other things that to talk about. But I think for me, that is probably one of the sort of challenges that we need to look at. Albeit we do have, from a lender perspective, a lot of innovative solutions, but I think it's looking at the government as well to try and get as much support as possible to help these guys.
Fantastic. James, do you have anything, do you have anything to add to that?
Yeah, similar to what Caroline was mentioning, as a building society, we've been putting a huge amount of focus into our first-time buyer research and proposition, and some of the figures that we've sort of pulled out and looking at the changes in the market for first-time buyers are quite stark. When it comes to first-time buyers, their age is growing, or the average age of a first-time buyer is getting older, especially the ages from sort of 25 to 34 is the one that's been most affected. We've seen quite a reduction, dropping from 66% of first-time buyers being in that age group in the year 2000, and that's dropped down to 44% in 2023. There was some figures out yesterday from IMRA that I noticed that Mortgage Solutions had reported on that first-time buyer numbers are down 3 million since the crash. So it's one of the areas of the market that we see is probably struggling the most, with also not getting as much government support as what could have been in place. And so the situation for first-time buyers is consistently getting worse. I completely agree with the three things that Caroline mentioned, and add one on in that education is a serious thing for first-time buyers. From the research that we did earlier last year, called A Place to Call Home, we identified that I think around 30% of possible first-time buyers really don't understand the home buying process and some of the terminology that's used, and so in that kind of, not vulnerable, but from an education perspective, aren't prepared for that journey. And that's where brokers and administrators really come into their own. Administrator in particular, because they are, from thinking about the hub of the wheel that has to deal with all the different stakeholders that are involved in that process, and they are the ones that are going to be doing the hand holding. So any way that they can keep themselves updated and in touch with that process and the first time buyer journey, and being able to show that empathy towards them will help show real value.
Great. And Liz, and I'll go to you next for kind of like the broker perspective. I mean, kind of, I suppose, digging into first time buyers again, when they come to you guys, what are they, has there been a change in behaviour in, what they're asking for, what their expectations are, that kind of thing?
Yeah, I think we've, just to echo really what Caroline and James have said, we are seeing first time buyers, struggling with things like affordability. And, so we're seeing more and more demand for some of the lender products that address some of that, maybe with family support, bank of mum and dad, utilising perhaps mum and dad's equity in a property to get a larger deposit, or having mum and dad go on the mortgage as a guarantor or joint borrower sole proprietor in order to make the affordability work. So it's really good to see lenders coming out with more of those products and solutions that can help first-time buyers actually get on the ladder in the first place. But we've also seen some other changes in behaviour. We've seen a lot of increased, digital engagement from, from customers. So more and more of the customers being prepared to use things like the online platform to submit their application information, upload their documents, things like that, doing research and communications, and particularly quite a lot of use of mobile. That's been increasing as well. And the other thing I would say in terms of changes that we've seen is an increase in the use of longer term fixed rates. So it wasn't that long ago that 2-year fixed rates were probably the most popular, and then, quite valuable to advisors as well, because there's lots of, needing to remortgage every 2 years. But that's really now shifted to the 5-year model. Most of the deals we're seeing are going through on the 5 years, and that goes hand in hand with the affordability issue as well, because the way that the lenders calculate affordability can be more generous with a 5-year fixed rate. I don't know if you agree the same there, do you, Robert?
Sorry, I just had a coughing fit, but yeah, still having a coughing fit. Yeah, Robert, are you seeing similar things?
Yeah, I mean, I think from an Amy perspective, all the things that have been said by Caroline, James and Liz are absolutely right. And I view this as being a market that continues to develop but gets continually more complex, which is the challenge. In that we have, we're in a strange position in the UK that we have over 120 lenders out there with a myriad of products that give great complexity, and therefore that's why the intermediary sector has flourished over the last 5 or 6 years in particular, where we got effectively, for originations, effectively more than 90% of mortgages now being done through the intermediary channel than anything being done direct. That means that also with that lender complexity, anybody thinking they can self-serve now is in the wrong place. But also that whole complexity also brings the challenge that the administrator in particular is really important, because if the advisor is out on the road or dealing with new customers or dealing with that, the real fulcrum of making sure that the whole thing, which was Caroline was mentioning, the whole making sure that the choreography works to coordinate everything between the valuer, the lender, the solicitor, the conveyancer, in order to get the deal over the line is critical. And I know that from all the discussions we have, the stress that's been put on people over the last 12 months in particular, as Mortgage Charter came into play, the amount of rework that's having to go on and the pressure on people in terms of having to rework cases is just ridiculous. So all the work we can do to try to simplify that is really essential. So I have sympathy for everybody involved in this market at the moment, because we're asking them to jump through hoops in a way we've never asked them before. And it's not because we think it's unreasonable, it's just because we've got customers at the sharp end of this who deserve the best deal. And we're all in this business to try to deliver that. But I think we're facing challenges at the moment we've never seen before. But everybody's trying their best to get to the right outcome, and we have to help each other get there.
Definitely.
Yeah,
Agree.
thanks, Robert. Sorry, guys, for the coughing fit.
What I'd also add is it's not just about just the first-time buyers though as well. I think if we think about our second steppers, and all those people, I think we've got a big challenge in, like, I think there was research that I read. Sorry, you can hear my dog scuffling now. 6 in 10 borrowers are concerned about their current mortgage deal ending and their ability to secure an affordable rate moving forward, and that is, for me, another sort of consideration. Because if we think about it, in May 24, the average rate for a 5-year fixed mortgage stood at like 5.91 versus if we looked in 2019 at 2.85, which is a significant uplift. And significantly, if you look at it on the 2-year fix, I think they will start, if we look at it now, that 5.91 again is probably the lowest. So it's looking at it and considering them, coupled with, there's been other studies that have said that 71% of adults express deep concerns about their financial situation in the light of the ongoing crisis, and that doesn't include those with impaired, like missed mortgage payments, etc. So I do think that's another area that is where the change in complexity comes in. And this is where, obviously, again, going to James's view, that mortgage administrators play a vital role in kind of easing borrower worries and trying to alleviating consumer anxiety where there is any.
I think that's a really good point. I think also Robert's point about a lot of rework being done segues quite nicely into the next section, which is about new market trends. And I think technology is a really key element of that, to try and kind of smooth out the process and to increase efficiency. So kind of looking ahead, I suppose, Robert, do you think that like things like, AI and those kinds of advancements will really kind of help reduce that rework needed and kind of really stop, reduce the number of hoops that you said that people are currently having to jump through?
The interesting part of being near the end of my working life is that for the last 46 years, I've always been told that in 10 years' time, technology is going to make me redundant. And that's happened on 6 or 7 occasions, as this new technology is going to come and totally change the workforce and get rid of it all. Funnily enough, it doesn't quite deliver that way. And I think this will be another revolution where it will depend how we choose to apply it. So some people worry about AI, other people want to embrace it. I think that we are still in an industry where the human intervention in a transaction which is significantly large is really important. And we're not going to get to a point where all of this is automated away very easily. What we will want to do is use that technology to do more of the heavy lifting, to allow actually the quality time to be spent interacting with the customer and actually using the technology to gather information and data and transmit information and data in the most efficient way possible. And if we do it that way and embrace it in a way that enhances the service proposition as opposed to replacing it, that will keep us in a really good place as an industry. So I can't see customers wanting to totally engage on an automated basis if they're borrowing £300,000, £400,000 or more in order to get the dream house that they really want to build a home in. The other part of that is just thinking through what it might do. And I was at the BSA conference the other day, there are 43 building societies, 5 of which are currently looking for technology solutions to one aspect or other of their work. There were 32 technology providers. It is crazy the number of people who are trying to solve a problem which may or may not exist through the use of technology, when actually we're not using most of the technology we have today in a way that works effectively. And therefore, the way we work, and most of the work comes off the back of sourcing systems or search engines, and then how we make applications to lenders. Most of those are not working end to end at the moment in a way that's efficient. So until we build some of that stuff out at the moment, fearing the advent of AI into that arena is just not going to happen in the next 5 years, in my view. So we need to be aware of it, we need to embrace it, we need to think about how we apply it, but how we get to a place where genuinely it's part of the process that includes people, I think, is the right answer.
Liz, do you have anything to add to that? I know some administrators might be a bit wary of AI, coming for their jobs, but from what Robert says, is actually if we use it in the way to basically enhance gathering information, then it's not actually going to replace a job. It's actually going to replace your job. It's going to improve the way you do it. Do you say that's accurate?
Yeah, absolutely. I totally I'm on the same page as Robert. I've kind of been in the industry a little while, and I've seen lots of other technology times that are going to sort of take over and be amazing and so on, and never quite. Oh, and I'm a real tech enthusiast, and I love AI, and I love this time. I do feel this time is a little bit different. I think AGI and the onset of that could come a little bit faster than we're perhaps prepared for. And I think we've got to be wary of potentially new entrants without the current baggage of the old entrants perhaps coming in and playing in our arena. But I think you're right in terms of, those who are willing to embrace it and adopt it, because it's a really important piece here. We have got lots of technology already that isn't properly being adopted. So people do have to take the time to learn, to understand and embrace it. And then that will enhance the relationship that they have with their customers, improve service, improve speed. For example, we're in the next week or two, we'll be going live with a system, an add-on to our CRM that will take the documentation that a customer provides to us, and it will analyse the bank statements, it will make sure it matches with the pay slips, it will categorise it or help with the affordability assessment. Some of this stuff that we're doing at the moment is incredibly manual, and that's where I see the real benefit of the AI, is to remove some of that manual stuff that we're doing, and then it really relieves the administrators to kind of work on those things that are real value adds for the customer in terms of building relationship, in terms of giving advice and guidance, in terms of talking about things that we don't have the time or resources to do at this minute in time. So I'm quite excited to see where it develops, and certainly within our business we're looking to try as many things as possible.
Great. I suppose be good to go to James. Thanks for the kind of lender perspective. Do you kind of see AI and stuff having an impact on lender operations, and how might that impact administrators, or is it more that stuff that will work in the background, do you think? It's a bit of a difficult question, sorry.
Sorry, I'm not sure if I think you came to me then. My reception's just gone a little bit, so I didn't catch quite all of that. Can you hear me okay?
Yeah, I can hear you. It's basically what AI and for lenders, and how might that impact administrators, or will it just be working in the background?
Okay, I think I caught most of the question, so I'll go with what I've got. So, from a lender's perspective, I think AI is going to bring some definite improvements, and we're not anywhere near the Alexa being able to sort you out with a mortgage, and that straight full advice process. There's far too many working pieces to it. But like what we mentioned, that AI will be able to do a lot more of the heavy lifting, and I think it's going to be able to analyze a lot more of the data a lot quicker, and it's going to be able to give us much more insight, which will have a massive impact towards the customer, and the fact that we'll be able to offer more bespoke, specialized underwriting, therefore a quicker service. Then how that then relates to our risk assessment and products, and I'm sure that will help us to provide more bespoke more interesting products. I think I'd love to be able to say that we'll be able to do better pricing and things along those lines, but I think you'll just be able to get to, if you've got a customer who is a simple remortgage, you'll be able to do a faster transaction with a product and a risk assessment that might be able to offer them more affordability at a better price, and to be able to do it faster. But like what Liz and Robert both mentioned, how far we are away from that is a while, because I think the other thing to consider with AI is the risks that it comes with. It's fantastic that it doesn't come with any prejudice, but if you don't give it the right parameters, it also doesn't have any values. So AI can be used for fraud. It's already being used for fraud in terms of creating fake documents, and if we add this into our business in terms of a lender, to any business, and you get those parameters wrong, then it's going to create a massive issue, because if you're getting it to do one job and that job then gets done wrong 1,000 times, then it's going to create a significant risk, and I'm sure the FCA wouldn't be particularly happy with it, and I know that they're looking at that very closely as well. From an administrator's point of view, like what they said, keep yourself updated with this, because I think this will help elevate administrators from being that processor to be into a more strategic position. In the fact that if they get the understanding of how to use AI, then they suddenly become into a more strategic position of being able to see the analysis that comes out and how it's then used. So it's elevating up from being inside that process to then sort of overviewing it. And if they keep themselves upskilled how to use AI and what potential it has got, then I think that will then create a massive value to the business that they're working in.
Can I just pick up on that fraud piece if I can, because I think it's an important point. I think from an administrator's point of view, very often they're involved in doing a lot of risk checking and checking documents for fraud and so on. And I think whilst there is definitely an increased ability for fraud to be committed with AI, there's equally an increased ability for fraud to be detected with AI, and we're already using those kind of tools and detecting more. So even, for example, using systems where we can upload documents, and it will tell us whether that document is fraudulent or not. So AI is keeping up with AI in those areas, and I think that's an important point that we need to address too.
Great. It was good. I think it's an interesting point that Liz and Rob raised about, there's technology that we already have that we're not really leveraging to the fullest extent. I suppose I'll go to Caroline of kind of like, what kind of technology do you think we have that's not being, that's not blue sky thinking, it's not, the Skynet or whatever, what is there technology at the moment that we should be kind of really utilizing more or taking more advantage of?
So that's a really good question. I wouldn't like to answer that necessarily with affirmation, but from my perspective, I would say it's just even the very basic systems of sourcing. The number of times, for example, from a lender's perspective, when we've made rate changes and we've had scenarios where brokers haven't been aware of it and whatever, because it's not, their systems haven't been updated. So it's just even down to simple things like that. For us, I think from a lender's side, I think we need to be adopting more of the API links into systems to obviously speed up the process, because there's so much involved in mortgage cases right now. So it's kind of making sure that we are all keeping ourselves to account and making sure that we can, use those opportunities, I guess, as much as possible.
Great. I'm going to, we're conscious of time because I do want to leave as much time as possible for questions. Kind of talking about, I think a key theme of this discussion has been the essential role of administrators staying informed and the importance of education. So I suppose I'll go to, how, importance of administrators to be informed of current trends, of kind of, maybe some things coming up in the future. What would you say the kind of best resources they can use to kind of, obviously apart from mortgage and specialist lending solutions, what are the kind of other resources that they can use or that to kind of stay up to date and, also maybe progress their career? I'll go to Liz first.
There's an absolute wealth of resources available. In terms of knowledge, it starts with the lenders, of course. They're fabulous at kind of keeping us up to date with what's offered in the market, doing training sessions and so on and so forth. In other areas, in terms of the market, it's very easy to, these days sort of follow the FCA on LinkedIn, and you'll see its latest post is about technology. That's straight from the horse's mouth in terms of, what they're doing and how they're feeling about that. And just kind of being market aware, signing up to the media news and looking at things like that and so on and so forth. So I think it's about being curious. It's very easy for us in our day job. You get caught up in your day job and you kind of get the job done. And there's a lot going on. Administrators have a massively tough job some days, particularly when the rates are pulled, But it's about staying curious and saying, actually, what's going on there? What can I do? How can I do things better? how can I use some of this stuff? How are you using it? Because, a lot of this at the moment is very self-taught. People are diving onto ChatGPT and having a go, so sharing what other people are doing and how that's being used. And, certainly within our company, we're sort of set up a particular group that's learning a little bit more and then sharing that out with the team. That's sort of early days. So those are the sorts of things I would do. In terms of, career opportunities for administrators, I think adopting the technology is definitely the way to go. If you don't embrace it, I think eventually, whether it's 2 years, 5 years, whatever, that's when there could be a problem if you've not adopted it. So I think that's the most important thing, to adopt it and to learn, but then apply that in any different way of growth that you want, because it's going to apply to every single department. So whether you want to stay an administrator, whether you want to go into compliance, whether you actually want to be an advisor, or even divert into sort of finance or marketing, all of that is within our mortgage industry, but it's all going to be centered around technology in some way, shape or form.
James, do you have anything to add to that?
We have a fantastic resource that I get through Leeds, but it's available to everyone with LinkedIn Learning. It's a great resource where you can have it literally on your phone. It's a good way of being able to avoid sort of doom scrolling and doing a little bit of micro learning, because you can literally log onto it and do courses AI was one of the ones that I've been doing quite a lot on recently, and you can go from doing anything that's an hour, 2 hour long sessions, and obviously at the end you get a nice sort of little certificate to sort of show that you've a build up of show the build up of all your actions and how much you've done, so it goes towards your sort of personal development plans. But you can literally do ones for as little as 2 minutes. So if you do it in that moment where you are a little bit bored, and rather than going on Instagram or something along those lines, then it gives you that option just to go and do that little bit of micro learning, and you get that tick in the box to say you've done something positive for your day. But again, that also goes into my other little tip that I'd say to our teams, is try and do it self-development little and often, because trying to do something that's big and long-winded, or leaving it to the end of the quarter when your one-to-one review might be coming up, or something along those lines, and little and often always makes best sense.
Caroline, do you have anything to add to that?
Not really, apart from to kind of endorse what Liz and James have said. Make sure you're always learning, I think, is probably the premise of it. I mean, I'm continuing trying to read and embrace as much as I can, because that's it just adds tools to your armory, as it were. But about studying CMAP as well, to develop the basic mortgage knowledge, if that hasn't already been undertaken. But also, if you do see a lender in the office, or an underwriter there, sit down with them and kind of just forge as many relationships as you can, because you can always learn from them as well, from a practical perspective. Ask to attend any local mortgage events, because there's lots of them running, in addition to lots of webinars that I continuously see being run by lenders and distributors. But yeah, I mean, also going back to Liz, I do definitely think it's about embracing technology, because it definitely certainly touches all avenues, whether you want to stay in your existing role, lead a team, move out of, whatever avenue, technology is certainly there to stay. And I think the more you can empower yourself with it and understand it, then the more fulfilled you'll be.
Fantastic. Robert, are you kind of...
There's a couple of things, which is, and Caroline's touched on there, I think whilst these events which are virtual are great, I actually believe turning up at physical events is really important, to try to network and find other people doing the same job as you, and work together. The last element of that is the Working in Mortgages mentoring system.
Yes.
So if you actually are interested genuinely in developing your career, Working in Mortgages is a free resource out there, which Amy is working on, and Diff, which is part of A3, help sponsor the mentoring work. Use that. We've got a lot of people signed up as mentors and some people as mentees. Use that resource. Go in and look at who might be able to help talk to you about how you develop yourself or your career, because that is a great way, as a free resource, and people will give their time willingly in order to help grow the next generation of people in our industry, because it's essential we do put all that stuff out there to grow the next generation of leaders in our industry. And if somebody wants to be in that space, then it's the best resource I can think of to do that.
I think that's a really good, sorry, Liz, you go ahead.
I was just going to say, I agree with Robert involved in the working in mentorship as well. But I agree with Robert wholeheartedly about that getting out face to face. And lots of the events, and this is fabulous, this event, because it is actually geared just to administrators. And lots of the events are geared to mortgage advisors, but it shouldn't put administrators from going, because the learning that they get from that will really enhance their own development, their growth, the way. And even if they want to stay and do a fantastic job as they do currently as an administrator, they will get even better and better with that learning they get from those advisors that, from those events that advisors attend as well.
Great. I think there's now time for questions, and we've had a couple coming in. So this one's specifically to Liz, which is asking, would you say that CRM extensions replaces the need for administrators to check documents from a compliance view, i.e. checking the validity of documents?
So I like to use a phrase called human in the loop. So AI is fabulous at of doing all this assessment, but then you do need to still look at what it's done and say, actually, is that correct? Has it covered everything? Am I comfortable with that? You might, if you apply the sort of 80-20 rule, what you might find is that it does the most fantastic job for 80% of your work, but then there's the slightly complex areas that 20% of your work will still need that human in the loop to assess and make sure that we're right with that.
Great. And we have a question, and it's specifically talking about the great work that the Open Property Data Association is doing. And so it's basically saying it's going to digitize the property transaction process, and hopefully it will get the whole timescale down to 15 days, which is obviously really great. It's on pause a little bit now because of the election, but hopefully that will start getting picked up again once the election, which is next week, once that's all planned out. The question is basically, will lenders be changing their processes in line with those improvements? Otherwise, it will be the mortgage offer which delays the transactions in a lot of cases. I'm just quoting what the question says there. But I suppose it's a bit difficult to know the changes made until we go through the system. But I suppose that goes to Caroline and James there.
I think we should go to Rob with Larry's laugh.
Robert, do you want to chip in on that one?
No, I mean, I think having been very involved in the creation of the Open Property Data Association and working with Maria in terms of trying to work out how we get the mechanics of this to operate for a very long time. All this is an attempt to effectively digitize all of the data that sits in the land registry and in search data, which will allow conveyancers to do the job a lot quicker. Now, we will still be caught with how long does it take the survey to get done? How long does it take for the mortgage offer to be produced? But the barrier at the moment is the 6 months it takes from start to finish, from acceptance offer to legal completion. That is the biggest barrier there is, and the number of failed transactions that occur because of that time scale is the issue. I always say that I don't want to move in 15 days because I've still got a shed, a garage, and a loft to empty before I move house, and most people are in the same space. So it's not going to be a 2-week job. However, if we can get to the stage where we can genuinely consistently do this in under 3 months, we will save so much money, save so much on aborted transactions. We will be in a much better place. If we can genuinely get to the point where the conveyancer can press the buttons and also make sure people can move before 1 o'clock, not on a Friday always, we get to a much better place. So all of this automation is to try to reduce the cost, reduce the friction, make it work more effectively. Do I believe lenders will have to become smarter? Yeah, because I think any lender who's in the marketplace taking 30 to 40 days from app to offer is going to be dead in the water, because that is not going to be an acceptable time frame. If you're in that 15 to 21 day window, which is where most people are, that's the sweet spot where many people are, then I think we're probably okay.
I've just also been asked by someone to, Robert, if you could give the working in mortgages, is it workinginmortgages.org.uk or is it .co.uk? Just want to double check just so that everyone can access it if they need to.
Let me look it up because I can never remember.
Okay.
We own the domain, but I can't remember what it is.
We'll send out a link when we do it. We put this.
It's working in mortgages, one word.
Yep.
.org.uk.
Great, fantastic. So another question which has come through is about: are you not worried at how AI will view clients / underwriting And sometimes when lenders use checklists, is it essentially a computer says no, as it's not being looked at as an overview and taking a good judgment. I think what they're trying to get at is, will AI just kind of reduce, obviously it will create efficiencies, but it kind of reduces that kind of more might reduce that more tailored approach. I don't know who wants to have a stab at that question.
Well, I suppose I have a bit of a go. So, I mean, already there's a lot of technology that we use to help underwriters. We've just moved in the last few years onto the MSO system, which doesn't just bring efficiencies for the broker, but it also made things much easier for our underwriters in terms of the valuation and the automation that they get. So rather than them having to check on 3 different systems, it means they've got everything put to them in one nice, clear, I suppose, tailored screen. So it makes it very easy for them to underwrite it, and with as much automation as possible. And that's where we've been able to improve our lending speeds. I don't see that AI is going to be there to prevent us from lending to customers. If anything, I think it will enhance us to be able to lend more, because we'll have better insights and we'll be able to do it quicker and better and more tailored to their needs, rather than a computer says no. I think if there is a no, I think it will be a more accurate no, rather than lending less or being able to lend to less customers.
Caroline, do you have anything to add to that? Just to add another lender perspective?
So for me, I'd say AI is probably great for looking at the vanilla mortgage or for the basic information. So if I think about from a UTB perspective, we've just started piloting AI just to kind of identify some stat words to identify, for example, vulnerability. But from my perspective, from the specialist mortgage market side, I can't see how AI really would have an impact with that, because the complexities that arise in specialist or complex cases can't be catered for, I don't think, sufficiently without the human touch. So, and nor would I wish that to be the case, given the bespoke nature of the case. I think we'd always want someone to be checking it and making sure that everything's being accounted for, because AI is what to be learned, and we want to be able to look outside the box, because every borrower's financial situation is unique. And so therefore you need the expertise, I think, of somebody who's seasoned and understands all the different intricate information.
I think you just, I think just one thing we just need to differentiate is between technology and AI.
Yeah.
Which are 2 quite different things. So the technology that's being used for underwritten is very black and white. The difference with AI, it is a learning machine. So technically we can teach it to underwrite, and if it doesn't do correctly, human in the loop, we can teach it better. So we just need to be mindful that that's potentially where it could go.
Great.
But it's, for me, it's, I guess also though, it's the understanding and the human sort of touch, that, because obviously big experience. So I think you still need that element of human touch. But I do get your point completely. I don't think we fully understand AI yet.
I also think that with different lenders having different approaches, it helps. It proves the value of the broker and the administrator and the intermediary, because they'll know which lenders have different underwriting procedures or preferences, and having lenders in different markets where they'll be doing more bespoke, personalised underwriting for human underwriters still, then again, it just adds more value to them, knowing that would be the best place for that particular customer, rather than sending them to, I don't know, maybe one of the high street lenders that might use more AI or more automated processes.
I think this is the thing, that AI is more liable to be binary than shades of grey. And I think that's one of the issues that sits in the space. And I think one of the interesting parts of the UK mortgage market is, yes, many parts are fully automated, and even in underwriting in some of the larger lenders, but it is the fact that you have manual underwriting across a whole host of firms that gives that colour of ability for many different customers to access a market that they would not be able to otherwise.
And we've got a really, really good question. I think, just looking at the time, this might be our last one. So what do you, this whole session was called Tomorrow's Mortgage World. What do you think the biggest changes will be in the next 5 years and in the next 10 years? So I'll go to Robert first, because he's wincing the most.
I think in the next 5 years, I think we're going to see a lot of structural change, if that makes sense. So I think we'll see consolidation and failures, and we've seen a couple this year of firm failures in the intermediary side. I think we'll continue to see consolidation and failure. I think it goes back to Liz's thing, which is, how do you avoid that? You avoid that by being inquisitive and positive and engaged. That's really important in terms of being a solution to that. In 10 years' time, I hate to think what the world would be like in 10 years' time. It's one of the interesting parts. I say hate to think. I have no idea what it will look like, because if I go backwards 10 years, I would not think we would be where we are now. I think technology will radically change what is going on in the world we live in, not just in the world of mortgages, but the world we actually operate in. But I do genuinely worry as to whether those impacts are fully positive or fully negative, because I'm going to say this, as a species, we've grown and developed by human interaction, and often with that human interaction being physical. We're entering a period where we are beginning to diminish that human physical interaction and move into a different place. And I'm not sure we as entities are ready for that. And I think how that push-pull comes over the next 10 years will be the biggest decisions we're all have to make collectively and individually. Sorry for the philosophical debate, but that's my best.
We love a philosophical debate on a panel. It's great. Liz, what about you? 5 years and 10 years?
Okay, so I think in 5 years, there's gonna be things that we're gonna be doing that we didn't think were possible today. Driverless cars, for example, have been passed through government just recently. That's definitely going to happen. It's already in the US. It's always worth looking to the US and see what they're doing, because we tend to just kind of follow and do it afterwards. Getting a bit philosophical, a bit like Robert there. I don't know if you've read Mo Gawdat's Scary Smart. If anybody hasn't read it, a vision of what it will look like in 10 years is just unbelievable. And we have an opportunity at the moment to train the AI to actually be what we want it to be, as opposed to anything else. So yeah, goodness knows what it might look like in 10 years. And that could be amazing. Might be different, but in my view, you're either adopting AI and doing it, or you're probably retired early.
Okay. James, how about you?
For me, in 5 years, I suppose is more of what I want to see rather than what, and I would love to see that green finance and green initiatives are being taken up more regularly, and that we're starting to see some real change in that aspect, and we're starting to see lenders, well, I'd say the whole market, but lenders and the government as well, putting some real effort into helping decarbonise our current housing stock. And then in 10 years' time, I haven't got anything. I don't think that's going to be quite as thought-provoking as everyone else. I think I just want to see a smoother, faster customer journey, and I think that's what we will have by then. How that would look, though, I've got no idea. The idea that we could just turn that a customer wants to buy a property and they can do it within seconds and then choose their completion date, that would be the ideal one, rather than the to and train that we get at the moment. So that would be it for me.
Great. Caroline?
Well, I'm blown away by it. I feel like it's. I'm going to definitely have to read Liz's Mo Gawdat's Scary Smart, because I'm sure that there's some possibility. I know I went to Manchester the other day and saw robots literally delivering Amazon parcels, which was completely beyond me. So actually, if you can see that, then, and I've never think I'd see that ever happen. So from 5 years time, I think for me it would be having enough, and this is like a plug in the air wish, more properties and more supply. So actually everyone can get a home that they rightly deserve, and also from a swift processing perspective. 10 years time, I dread to think, but I think it goes back to the point of being an adopter of digitalization and embracing all the change like AI and being ahead of the game as opposed to behind it.
Sorry, just checking to see if there's, I know that I said that was going to be the last question, but I'm just checking to see if there's anything else that I can spring on you guys before we end. But I think that is possibly all that we have time for. So I think the key takeaways for me from this session is that, you know, technology might seem quite intimidating, you know, but it will, if you embrace it, and it will kind of enhance what you're already doing. It will make you'll improve data gathering and information, and just give you a more holistic view of your customer, and can just help you do your job better and deliver better customer service. And we don't even know, like, some of the things that are coming down the track, but, you know, they're, you know, don't necessarily be afraid of it, keep up to date with it. And also, education is vital. So thank you so much to all of our lovely panelists for joining me today. And I hope to see all of you at the next session. And I hope you have a fantastic day. Thank you so much.
Thank you.